a treat for you. Tom Teague is going to come in. He's in the green room, and we're going to talk what's going on with the Fed. How you doing, Tom?
Good. How are you?
Oh, man, busy. It's Thursday. I'm looking forward to the weekend. But
You and me both.
What happened yesterday with the Fed?
Well, they cut 25 basis points. They announced that they were effectively going to start buying more bonds. I think that surprised the market on the upside, which is a good thing. The press conference turned out to be, I think, a little bit more dovish than what people thought. So initially, markets were kind of sketchy, and then they rallied into the close yesterday. Sold off just before the close, but they were still up. And I think what's happening right now, I think the bigger picture is there's, as you normally when the Fed cuts rates, it takes a while for that to feed out to the economy. If the Fed comes out after the rate cut and then gives a presser like he did yesterday, and they sound very dovish, the market starts taking like a view that there's going to be further rate cuts, and they're going to at least move in a direction over time. And then sort of the animal spirits take over, and the markets start doing better, and companies start hiring and start their CapEx back up, and these kind of things. I don't know if we're quite there yet, because my version of Powell's dovish is still fairly hawkish.
Yeah.
I don't like the way, and I've made this point clear before, but I don't think Powell, I think he's not a trained economist, but B, I don't think any of these guys have any clue about the way things are going. And the country's so divided along the political spectrum that, there's people that want the economy to go in recession so they can shut Trump down in the midterms.
Yeah.
And I think a lot of these people in the Fed are minded like that. They believe in a very different philosophy on the way the Fed should perform and what they should be doing, like the DEI stuff and wealth redistribution. And so, but I think what's happening is the chairman's only got like 3 more meetings. And I think people will start looking forward. And as we move forward, like another month or two, we'll be closer to that happening. And I think people are going to start waking up and saying, actually, there's going to be a lot of quivers, a lot of arrows in the Fed's quiver to deal with the current problems we have. Bonds are still way too wide. I know a lot of people think the curve's going to get really steep, and it could, but I think also the way the bond distribution is shaped, the way that our Treasury's been borrowing, it's very front end loaded. So further rate cuts are going to decrease very quickly the amount of interest that we have to pay on our debt.
That's an interesting point, because, I always screaming for years while I was on the street, why don't we issue 100-year bonds at 0?
Well, we should have but Yellen did not do that. And that was a huge, colossal mistake on her part. And and again, like, people tolerate this stuff these people in the Fed are the most important people that we have probably in government, right? That are not elected. They're the most important bureaucrats. So if they mess things up, they should be held accountable and their feet should be on the fire. And they haven't been. But Yellen, when she was Treasury Secretary, went out probably at the behest of the Chinese, because they saw what was coming. They saw the inflation that they were causing by not up and jamming up the supply chain. She decided to borrow everything in the front end. That's the opposite of what you want to do in that situation when we had rates really low, near historical lows during COVID, right?
Yeah.
You should have done everything in the back end, and you get
it's the Lehman Brothers way of doing business.
So it's really there's no excuse for that. And
why not finance the U.S. government in overnight repos? It's the same.
Right. Well, one of the things, I've heard some people, I respect Stanley Druckenmiller tremendously. And he really excoriated her for that. He was like, this is one of the biggest, screw ups that we've had by the Treasury in a long time. Bessent said the same thing, but what Bessent's doing is actually smart. He's taking advantage of that now. And so my view is, rightly or wrongly, as we start cutting rates, you're going to have people that are forced to go into the back end of the curve to get yield. As long as inflation's not, a problem. I don't think it's going to be a problem. And I think the reason that it's sticky is because, frankly, they raised rates too quickly in the first place. They should have gone to a neutral stance. What they did is they ended up making working capital more expensive. So to get the supply chain back to pre-COVID levels, you can't do that if working capital is excessively expensive.
Yeah.
And that this is like a new phenomena. This is like something we haven't had a Fed that tampers with markets and with rates the way these guys do. And I'm sort of the view that the Fed should be mostly neutral, and they should be here to stop bad crisis type stuff, not create them. And that's what I think Powell's legacy will be. He's the guy
they've done that throughout the decades.
Don't need.
Yeah, they've done that through the decades, right? I mean,
yeah, absolutely. But I think we have a more extreme version of it now than we probably ever had.
So they're buying bonds, is that right?
Well,
short term,
the Treasury is definitely buying some of the longer dated bonds where the yields are high, because the way that bonds work, for people who don't know, is the higher the yield, the lower the price from issue. So there's a lot of bonds that are trading at big discounts. And that's one of the benefits of selling into the long end when you need to raise money during really like low inflationary, low growth times, because they could have, some of these bonds are trading at 50 cents on the dollar or near that from where they were issued. If you buy those back, it's gone.
Right.
Like that 50% of that bond, you don't have to repay it.
So on that specific debt instrument, let's say it's $1,000 bond. I mean that you've wiped away $500 of debt for the U.S.
That's correct. That's correct.
Yeah.
You do have to roll it into wherever existing interest rates are, but that's only temporary, because if you think about what the Fed's doing now, they're lowering rates again. So then that more expensive coupon cost that you would have when you retire that debt, you have to borrow the money to repay or to get to where you need to be. Rates are going to come down. And so you'll end up paying less coupon over time. So, and I think it's for me, it's a very good sign. I feel good about this Fed. I like the way that a lot of these guys are thinking. I think, there was a dissent from Mirren yesterday. He basically wanted 50 basis points cut. And then Goolsbee, who is a good guy, but he's very much a Democrat. He was in the Obama administration, and Schmidt, who's the Kansas City chairman, voted for no rate cut. I think that's just bonkers personally. But, looking at their projections for where core PCE is going to be in the next year, it's still not meaningfully above 2%. So I think like worrying about 30 basis points on PCE is splitting hairs. I mean, it's a joke. There's a bigger problem, and that's that small businesses are laying off people, and the economy outside of AI, which you can't count on forever, is slowing down. There's also going to be, they're worried about tariffs in the future and the inflationary impact, which has not happened. But, what about the productivity increases we're going to get from AI? And what about the job losses that are potentially going to come from AI? So, those are very deflationary things out in the future. And the Fed should be more thinking about that than they should be like short-term tariff nonsense that hasn't even materialized.
So you mentioned AI. What are your thoughts on the whole NVIDIA situation with China?
Well, look, the reality is, if we sell chips to someone, how are we going to police that they don't sell those chips to China? I mean, that's just the reality. Weapon systems are a little different, right? Like, you just trust that these guys that we sell weapon systems to are not going to give them to China, right? Or they'd be cut off from us forever. It's hard for people not to sell chips into China anyways. And I think NVIDIA's view, and I think, and I agree with it, is you want our architecture to be driving AI globally. If you force China to then go and invest a ton of money in chips themselves, then there's going to be a competing, architecture there that we have to worry about, and we have to struggle with on a global basis. And we want our AI to be run by our chips that we design in this country. And we're frankly way ahead of China. So I think Jensen Huang's view of we need to sell China stuff so that that we can grow this thing together more or less. It's not just a greed thing is the bottom line for me. He's not like, we need to do it just so I can make more money. It's a question of like, do we really want them to be spending a lot of money developing chips or just using ours? And that's very much the way they play things in China, right? So
meaning
so they try to dominate the global markets with like their production, and then they own the whole system. We're just doing that to them, right?
Yeah, interesting. What about the housing market? A lot of talk that it's soft, et cetera. What are your thoughts?
Well, Home Depot came out this week on I think it was Tuesday, and they were saying that they're seeing, you know, some serious headwinds. Larger projects are being put on the back burner. It's no surprise. You know, mortgages are at 6%. I think you need mortgages to be at 5%, and I hope we get there sort of between now and June next year. I think we might. I think bonds have a big rally built in them at this point. And, you know, as I described earlier, I think, you know, further rate cuts are going to force people into the longer end of the curve, and that's going to definitely help with mortgage rates. So I think that's a big hold off. Housing's like 16% of our economy. So, you know, it's a really important thing. But since yesterday, housing stocks have had a huge bounce. So that's kind of encouraging. I don't think the home builders themselves are carrying as much inventory as they have been in down cycles before. So that's also good for those stocks, and they're really kind of beat up.
Your government doesn't care about you. That's why you need a medical emergency kit. It contains life-saving medications like ivermectin, Z-Pak, and antibiotics. Stock them before they block them.
This is a special report.
Knowing how to invest your money is harder than ever before. Dealing with stock market volatility, record debt, and terrorist attacks requires new thinking. At U.S. Asset Management, we can help you see the world more clearly so that you can move beyond the chaos and invest with confidence. Call us, visit us online, or drop by our office. U.S. Asset Management, helping you make better decisions with your money.
Where do you see value right now?
I think I see value in more of the cyclical stuff. I think that, you know, you have to be a little bit careful because, you know, if we have like, you know, some tough numbers, we've got a lot of data that's going to come out between now and the next Fed meeting. I think if you see unemployment tick up, I think you're going to probably have a bigger chance. Right now, it's about 20% for a rate cut in January, and they're saying there's no rate cut being promised, but that happened, you know, a month ago or more. I think the value is definitely in housing. I think that will start getting better. I think you watch interest rates, but as interest rates come in, and they should, I think that'll be good. You know, there's a lot of geopolitical stuff going on that hasn't helped our bond markets. Japan has sold off. Europe is just a disaster area right now. I'm concerned about headwinds from Europe. You know, they're making promises they can't keep to their own people. They're prosecuting people. This week, I just caught a little bit of your conversation before, but this week, the German government basically said that the AfD would not be able to run in mayoral elections unless they swore an oath to the democratic principles, whatever
prevailing narrative.
Yeah, it's a total joke. And I think there was a big gamble in Europe, which they didn't think was a big gamble. But, you know, I think they thought that Russia would be an easy pushover, which a lot of people have thought that, and it didn't work out well for them.
Throughout history. Yes.
A lot of Europeans, in fact. And, you know, Russia's coming out of this thing with a better GDP. They've got a lot of land. I don't think there's really any chance outside of a miracle that Ukraine regains Donbass, and there's a lot of mineral wealth there. So Russia's going to keep that. There's ethnically Russian people there. So the reality is that's probably what's going to happen. I think Europe loses out big. They were like licking their chops thinking they were going to get cheap resources that they were basically going to pay for at a very cheap price from Ukraine and Russia if Putin were gone.
1991. You know?
Yeah, correct. It's a joke. And Putin is a populist, and, you know, like him or not, he is looking out for the best interests of the Russian people. He might be looking out for himself too, but that's part of the deal. But I think he is looking out for the best interests of the Russian people, and I don't think he's going to roll over and just sell the West resources at the wrong price and be had.
Just wait till they get that Bering Straits highway built, man. I mean,
I think that would be phenomenal, personally.
It's going to be a whole brave new world.
I think longer term, I think, I don't want war with anybody, and it's really, really concerning to me that you have all these, like, I don't want to describe it in a derogatory way, but you have all these like war hawks who are anything but people who should be involved in war running Europe.
Yes.
These are people that want someone else to do it for them and think that they can just push buttons and win victories. And if you look at this conflict between Ukraine, if we've learned anything, all of that technology that we were supposed to be giving Ukraine that was going to work well, that entire like theory of the theater of battle got flipped on its head.
Yes.
All of a sudden, like, artillery made a big difference. All of a sudden, the amount of people that you could throw at it made a huge difference.
Mm-hmm.
And especially with Russia and their know-how after this event, it's not smart to be poking the bear. I mean, it really isn't. And I think Europe has no idea, especially after the last two wars in the last century. We don't need another 100 million people killed.
I think they do have an idea. I think they want it. This is, and I
definitely think they want it. And yeah. I recounted this story to some of my friends this morning. One of the first battles in the U.S. Civil War was the Battle of the First Bull Run, Manassas Junction.
Yeah, yeah.
And people thought that it was going to be like this, like party, and they brought out like theater spectacles, and they brought out picnics, and they brought out champagne to watch it. And they were overwhelmed by the savagery of war, and they all couldn't get back to DC because
in fact, the reason the Southern troops didn't take DC is because they helped all the ladies get on their carriages.
Right.
Seriously.
So, Southern gentlemen. But I think that I think these people have no idea what they're pushing for. And if you really want to see a collapse of Europe and the European system, start a war with Russia and see how that works out for you. And I think America has zero business being in a war with people who are agitating for a war with the biggest power, or the second, third biggest power in the world. It just doesn't matter. That's, it's not a gamble that you want to make. The sort of payoffs that you get are not worth the consequences of it going wrong.
Well, unless you're a globalist who wants to destroy the society and take over full power. I mean, I think that's what it's about, along with the resources. But
the last time Russia rolled into Europe, they didn't leave for a while.
Yeah,
and Europe was under the Soviet, evil Soviet empire for quite some time. So I think it's a massive mistake to tempt fate.
Well, you could make the argument that the old Bolsheviks are who's in Western Europe now.
I think that's clear. Yeah, these guys are Bolsheviks. And like, I don't want my allies to be people who arrest people for Facebook posts.
That's what we've been screaming about. Yeah.
These people in Europe have destroyed their energy policies, any energy independence they could have ever had. They've destroyed it. They've destroyed their industrial power. They've destroyed their societies with immigration and crime rates. They've destroyed everything with COVID, vaccines, you name it. They've done a terrible job administering the European Union, and they should pay for it.
Have you seen what's coming out of like MERS and Macron and Starmer? I think MERS was saying yesterday, it's America first is fine, but America alone is unacceptable to us. I mean, who the hell are they to say that kind of crap?
Yeah, it's interesting to me that after we have literally been their military umbrella for so long and afforded them the ability to create these dystopian socialist benefit systems, and they haven't been paying at all what they should have been paying all along for it, that now they're yelling at us. But Ukraine's doing the same thing. They're making kill lists with people they don't like in America because we're not giving them enough money, and they've stole like 30% of what we've given them. I mean, that's a complete joke.
I think I'm on that list. I get lots of that kind of mail. Well, wow. So I heard a little bird. You might be on CDTV in the future.
Yes.
He told me.
Yep. Working on
We're
it.
building CDM business. I think Tom Teague's going to be the anchor podcast on economics. So I'm really looking forward to that.
Likewise.
Anything else, Tom?
I just hope we get this Christmas rally.
Yeah.
Hope is not a great strategy, but I think we, like I said, I think we've got each day we have a clearer picture on how the Fed's going to react. And I think we've got good guys that are coming in. And I think Powell has been terrible for the Fed, terrible for the U.S. economy overall. And I think that there's some rays of sunshine peeking through with the future.
Looking forward to it. Tom, thank you, man. Merry Christmas.
Man. Anytime.